I'm a layman, and I look to others for my indicators on the market. But what happens when all they can do is shrug because big parts of the modern market have no track record? Welcome to the Between the Lies podcast, your weekly lesson on how to approach an uncertain world with positivity and balance. I'm Nicky P, here with my good friends and money brains Luke Tatum and Rob Brayton from Perfect Spiral Capital, as they help us navigate the snares and pitfalls in a world of trust me bro economics. Stick around to the end of the video for the free toolkit, and be sure to like and subscribe if you enjoy what we do. Gentlemen, is it business as usual, or are we in uncharted territory?
Gosh, Nick, I think we are in some kind of uncharted territory. I mean, exactly the extent to which I can answer that question is maybe a subjective opinion. But, we've got AI, we've got Bitcoin tanking to some extent. We've got some crazy stuff on the docket today. It was kind of hard to nail down what the topic was going to be because it's like a lot of nebulous insanity, I guess. What do you think, Rob?
Yeah, I mean, it is a lot of uncharted territory to some degree, where we have a lot of these companies, a lot of these assets are all based in tech, and I think that's the thing that we're trying to solve for and really see like what is the future, and a lot of us just don't know, and we don't have the crystal ball to say what's going to happen, where it's going, but at the same time, we have to try to base it off of what we do know and what does that look like? What are some of those sort of key indicators that we can apply in some areas that at least give us an indication of what might be happening? But I certainly don't want to be a speculator and tell people that, this is going to happen or that's going to happen because we just don't know.
Well, the reason I raised this question is because, like you said, we're looking at AI, we're looking at Bitcoin. I want to think back and say all of us were around for like the 2008 bubble. We were old enough to kind of know what was going on there. You take it back to the .com bubble, and I know, Rob, you might be the only one that really remembers that in any real way, and I'm not even sure you do. But was one of the companies we were talking about before the video was Alphabet, which was what was the percentage of the shares that thing makes up?
Well, yeah, Alphabet's one of the few companies that's like still around from that original era, but at this point, it's a behemoth.
But even at the .com era, was that around? Like, isn't Alphabet like really 2008?
Google wasn't really big yet. They were like still kind of eking out from the early 2000s. But I mean, at this point, they're making up a significant part of the S&P. About 6%. So
we'll tie into that. We have Nvidia as one of the other ones. It's a huge percentage. Once again, where was that back in, say, like the .com era? And these things between the two of them, what are we looking at? Like 11% of the market at this point?
Yeah, it's 7.5 for Nvidia roughly. And so what you said 6, right? So
it's like 13.5, I think, if you want to be specific.
So 13% of our market is tied up in things that didn't exist. I don't know what the percentage of the market is, but we look at the cap
the
on
S&P,
Bitcoin.
The S&P,
well,
yeah.
Well, the cap of what Bitcoin is. What is that like? That's what, in third place, I think, now, as far as like market cap goes.
I believe that's correct. Yeah, I would have to double check, but I mean, it's obviously a massive thing at this point when it comes to institutional investing and whatnot. Yeah.
And so when we look to anyone in the space and tell us what to do, every single one of them has to deal with the fact that huge sums of modern money are tied up into things that aren't even 20 years old. Like, we're all older than parts of the market.
Mm-hmm. That's true.
To me, it's like, we all look, like anyone who's teaching, investment, they'll teach you, well, here's a strategy, and you look for this little figure when you're looking at the history of the company. But we're talking in a lot of cases, when you're dealing in insurance, you guys are dealing with companies that have been around over 100 years. So yeah, it's easy to kind of predict them and what they do is what they've done. But when we're older than the companies we're trying to use to predict, how can we possibly reach anything meaningful when we're trying to maneuver around that?
Right. I mean, markets are driven by emotion, right? It's the same old fundamental thing about human brains. We all are wired this way. That's how we all work. You make decisions emotionally and then you justify it after the fact and go, "Oh yeah, this supports my decision. This supports what I said. So I'm going to favor that information." It's confirmation bias and all these things. And so I just feel like we've taken that kind of to extremes. I mean, we did the episode about the AI bubble specifically, and it's like, okay, cool. But like if you're all in, if you're trying to have like no dollars and all you have is Bitcoin, and you're dumping all your dollars that you still have into Nvidia stock, I mean, like just, I don't know that there is anyone doing this, but hypothetically, right, that's kind of a crazy position to be in, given that, Nvidia and Anthropic and some of these companies are all just investing in each other and doing all this stuff. And it's just like, what are we doing? What we're propping each other up. We're all making each other feel good. We're all patting each other on the back with $10 billion deals. But where's the underlying asset? Where's the actual reality of this is value? Is that a thing? Is there something there?
I think that's the challenging part about it, right? Like it's hard for us to say like this is where the value is. I try to think about history and is there a place in time that kind of gave us some level of parallel? And I think back to like the early part of the 1900s. It's not all that dissimilar to what we have today. However, what is different? What is different is that back then we had very tangible type assets that a lot of this stuff was built off of. And we had these huge market booms. The market was growing exponentially. It was growing quickly. We've been running through a big bull market for a long time now here. Different factors at play, but at least at that time, it was a little bit easier to understand who the winners and losers may be because they had these large groups of assets that we could say, yep, this company might do really well. We kind of have that with Nvidia because they're one of the largest chip producers and they have the infrastructure, they have that stuff laid out. That's why they tend to be doing well within that space. But outside of that, it's hard to say what is really there. And even with Bitcoin, like I know some people probably hate on me for this, but is there real value there? We haven't figured that out. Yeah, we have energy usage and we can try and tick and tie stuff there, but what is that real underlying asset?
Yeah, because again, it's driven by like to some level, it's driven by public sentiment, right? Like anything that is rare can be said to have value based on its rarity, right? That's one of the core principles of Bitcoin. There's a fixed amount that can exist, right? But usability wise, like when you have no electricity or whatever, well, yeah, if you have printed keys, I was just talking about this with a client of mine. If you have printed keys for every Bitcoin that you own, you don't own your coins unless you own your keys, that kind of mentality. Okay, yes, fine. I acknowledge, like I'm not Bitcoin ignorant. Okay, like I've owned crypto and Bitcoin, but okay, but is somebody seriously going to take my word for it if I hand them the like physical pieces of paper or whatever that have my keys printed on them? Oh, trust me, bro, that's actually a Bitcoin address. You know what I mean? Like, I mean, really? Is that what we're really going to do if we have a grid down type situation, like a severe situation like that? I don't know. I don't know if that's really going to happen.
Well, that's actually not what you would do in a grid down situation. In a grid down situation, it would actually work off of ham radios, but that's
okay.
another matter.
I am still skeptical.
Well, no, I would say still be skeptical because if the requirement for the Bitcoin network working is that everyone switch over to be ham radio operators, I don't see it staying in vogue at that point. Would it function? Yes, but is that really functional at that point?
Yeah. Is anyone going to actually do that? Are we all just telling each other that so that we'll feel better because we have a lot of money tied up in Bitcoin? You know what I'm saying? Like,
there's a lot of confirmation bias taking place in that situation.
Now, to be fair, and I always use this as my litmus, is that People be like, I went in, I was trained as an electrician, and the reason I became trained as an electrician is based on the simple fact that if we ever run out of a need for electricians, I'm probably not concerned about work because there's going to be more of it than we will ever need if it's manual labor than whatever. I feel kind of the same way about Bitcoin. If we ever reach the situation where Bitcoin doesn't function as it's supposed to, we all have way bigger problems than Bitcoin. like how are we dealing with the new Stone Age?
Right, but wouldn't you rather have like physical stuff at that point, you know? And so that's, I think, the kind of counterpoint that people don't like to get into. It's like, you know, well, hey, I've got a bunker full of usable things, so maybe I'm in a better position. You know what I mean?
Well, and you know what? If the choice was between you holding actual physical gold and silver, 100%. But that's actually not what most people investments are. Their investments are, hey, we have a bunch of shares that you hold on a computer somewhere, and that's what it's one digital thing versus another digital thing. Like this does bring me back to the thing that originally sparked this question, is because we've seen a lot of shifting in the past couple weeks as far as like these new technologies go. Bitcoin has taken a turn where people are like, oh my god, it's the bitpocalypse. And to me, I don't see that being a thing. Like 15% is what it looks like. Is
I don't either.
I see very specific things happening there to my layman brain. In the same vein, we've also seen a lot of shifts in this week as far as like the tech sector goes and people moving their money from one thing to another. Rob, I think you have a little bit more information on that than I have.
Yeah, one of the things that we were looking at, and there's certainly been some shifting to more stable type assets or hard assets within the market. I think that's where we've seen some of these pullbacks in some of the areas where people are kind of fleeing. I don't want to say fleeing, but they're definitely buffering for safety, because it does feel like there's a lot of volatility taking place. And that's where a lot of that sort of smart money, if you want to call it that, or institutional money, seems to be moving in that direction. And, you know, just using Bitcoin as that example, you go back to October 10th, when there was a huge withdrawal within that market. There was a lot of institutional money that was pulled out in that situation too. So like those are just some of the examples where they're moving. Even some of those groups are saying, well, Bitcoin's good, but we also need something that's even a little bit more safe than that. So I think that's where we're seeing a lot of those kind of shifts. But what are they shifting for and why? I think that's what all of us are probably more thinking is, if the money's moving in this direction, what are they seeing that we are not? And if we're not seeing it, what's the average Joe, the average person, the layman? They're not seeing it either. So
right. I mean, yeah, you have this element of, you know, there's dumb money, there's smart money, and then there's like the politically very, very well connected, ultra wealthy, ultra ahead of the curve people. You know, insider trading is illegal, but only if they tell you got caught, right? That kind of a thing.
Or if your last name's not Pelosi.
That's right. That's right.
You mean those people that when it looked like GameStop was going to turn on them, they stopped the market from trading people?
Yes. The things that you're like, well, how could that possibly have happened? And it's because, well, they know and you don't, and they're not going to tell you. And so that kind of stuff, I mean, could we be seeing that? Is there major stuff that's right around the corner that we're finding out about because of who's making big moves today? I don't know if that's true. And I guess we should say on probably every episode of this show, none of this is investment advice. Please don't go do any trading based on what we're talking about. We're just having a conversation here, right? But, you know, what I thought was interesting was that gold, you know, is doing pretty darn well recently, especially compared to Bitcoin, especially compared, you know, over the last like month, right? This Bitcoin stuff is declining. And I know, Rob, you and I both would point to gold and silver as things that have maintained their value, right? it's the same value relative to the stuff that you can buy as it was 100 years ago.
It's just a great reference point to use because the value of it just generally does not change. So but at the same time, if people are moving into gold, then that should tell us that maybe there's something up from a currency perspective. And again, this isn't to speculate in all these different areas. It's just that we're trying to figure it out, and we pay a pretty good amount of attention to this. And a lot of other people are, trying to do the same thing. So we're just trying to enlighten people the best that we can in this situation.
Another thing I kind of want to bring up, because you've mentioned some stuff that touches on this, makes me think about it, is that we're looking at gold, silver, things like that have an extremely long track record. We can look and see how they do. As mentioned, Bitcoin doesn't have a track record that we're used to following. But something that is peculiar to Bitcoin is that, as with other currencies, there's kind of like a global way in which they've worked. Whereas the average person is still used to thinking of Bitcoin measured against dollars. That's just how, no one thinks of Bitcoin as its own asset class as being completely separate. It's just been treated as an offshoot. And I think that muddies the water as far as like that can ever look. Like, or at least until those two things detach in some way and they're looked at separately. I feel like just the dollar being what the dollar is taints that. Like, is the Bitcoin shrinking because the dollar is shrinking?
Yeah, I mean, it's always hard to say. Like, we've had these conversations about, are we going to send out stimulus checks to everyone again? And, like, if that happens, how much new money is going to get printed? Because, they're not actually going to take it from the tariffs and, send it out to people. And not that the tariff money is even enough, right? And so are we just inflating the currency again? When things like this happen, when a lot of new money enters the market, how the hell do you price anything, right? It's experimentation, and it takes a while to actually figure out, oh, yeah, okay, this is what the price level is now.
Well, didn't the continuing resolution that just passed, last I knew it had to be approved by Trump, but it was good. Isn't it saying we're going to raise the debt is going to raise $6 trillion in like the next year? If you're going by like what Rand Paul says.
I haven't seen that yet, but that sounds bad.
Yeah. Well, they're agreeing to continue the deficit spending. That's essentially what that does. And I mean, that's money that does not exist. So it has to come from somewhere, meaning it gets printed.
Well, but now we're into the realm of percentages. And, what percentage does 6 trillion actually mean in our national debt? Because, well, the national debt's bigger than that. It's a percentage, it's not the whole thing. Our debt is getting to the point where, well, it's not that big of a number compared to the actual debt. So it's just making it a little bigger. And the worse we get the debt, the more it looks like that, the more it looks like less, like nothing. It's like our debt is so bad that deficit spending actually looks better when we do it. and maybe we'll add that to the list of things. Like, when we were kids, that wasn't a thing. There was no such thing as a deficit like that. Like, yeah, we owed some money, but
yeah, the deficits certainly were not that big. That's for sure. I mean, we're talking about 8% of the total debt as a deficit for a single year. Like, that's pretty significant.
So once again, add that to the list of ways in which what is this market? Is it anything resembling like what the markets that we were brought up in? Everything's new in the past 20 years. So, what I look to, I mentioned at the beginning, as we bring this, you're both, in the insurance market. IBC works in that system. And the beauty of that system is there is no real speculation as far as how that market competes, because it's got a very, very long track record compared to everything else. Now, granted, it functions in the broader market, but you're pretty stable on how your stuff works.
Yeah, it's extremely stable. We have 200 years of history, in terms of stability in those particular products in that industry. And not only that part of it is it also is highly regulated, that it has to be very consistent. It has to have a lot of reserves. It has to have a lot of liquidity. Like they have to operate the way that, frankly, most all businesses probably should. But that's the great part about it, is it's fully reserved. It's always backed up. You have a lot of capital there, and it provides a lot of security. And that, frankly, I mean, in an environment like this, knowing that you have security, knowing that you have the ability to not only maintain or even outpace inflation at some level, depending upon how you have things set up, and that just provides a lot of comfort. And you can continue to accumulate capital even in a situation like this. And at least that adds a lot of security for people. And if they don't have that, I highly encourage someone to start looking into it. Because if you have, let's say 10% of the money that flows through your hands in a safe place that you know is going to continue to accumulate for you, hey, that's a good feeling to have, and it provides a lot of safety, especially in a very volatile cycle like we're in now.
Yeah, absolutely. I mean, insurance companies are state regulated, not federally regulated, right? That's a huge boon with how crazy greedy the federal government is. The, books of a life insurance company are so secured, right? I mean, it's long-term AAA rated corporate bonds. They're not buying Nvidia stock. You know what I mean? They might have some shares, okay, but they're not they're not gonna go, hey man, Nvidia's making all this money, and put 90% of their books in it. They're not gonna put even 10% of their books in it.
It's a difference
right?
between my dividend, not the collapse of their company.
Right. Because fundamentally, right, we deal with mutually owned life insurance companies. They are owned by the people who own the company. The people who own the company want to see a dividend. They want to see long-term success. They want the company to be around to pay claims whenever you pass away. Right? Like if I die, I want this company to be able to pay a death benefit. I want them to be in safe assets. So they are. Right? That's how I'm going to vote. And so that's where you want to be, right? Bitcoin's on sale. You want to buy more Bitcoin? Guess what? It's a real easy thing to do if you got a lot of capitalization in your life insurance policy. I'm not saying don't do that. I'm just saying put your money somewhere else first. There is a proper flow of money. Like Rob said, earmark a portion of your income or what have you. You're good to go. You don't have to question your financial life when these major market shifts happen. So, but I mean, all that being said, I know we're butting up on time, guys. So I'm just going to say to everyone, thank you so much for joining us once again on the Between the Lies podcast. If you watched the full episode, then I know you're interested in the future of money. If you are also, therefore, interested in the future of your money, which you should be, if you want to avoid some of these fluctuations in the market, you want to be well-positioned and ready to capitalize on opportunities when they knock, as they are now, then you need to check out our free toolkit. It's over at perfectspiralcapital.com/podcast, and you will get 2 free video courses as well as a free copy of my book, Between the Lies. It's a lot of information, and it's going to teach you a whole lot. So go check it out. Until next time, thanks for watching again. We'll see you then.